Bosses. Rhodes Perry here, and welcome back to the Out Entrepreneur, a weekly podcast where I get to interview today's most inspiring LGBTQ bosses crushing it in business. And on this week's episode, we are jumping into our ever-evolving quote-unquote mini-sode series. As a reminder, the series is designed to support those of us thinking about getting started or growing our businesses. With audience feedback, we recognize that these episodes have already added tremendous value and go much deeper than a traditional quote-unquote mini-sode, which tends to be shorter than a regular episode, usually like half or maybe 20 minutes. So recognizing that these sessions run about as long as our usual episodes, moving forward, we have already rebranded what we're calling them. So these are our office hours, the Out Entrepreneur office hours. And they will air every other Tuesday in between the usual episodes, where I'll continue to feature some of the world's best and brightest LGBTQ plus entrepreneurs. So to continue to make these office hours more engaging, my faithful sound engineer and non-binary pod dream business owner, Allon Bellasoli, did I get it right?
Beausoleil.
Beausoleil, I'm going to get it. It's like, I will get this.
No worries.
Beausoleil. Phonetically, I will remind myself. So we're going to riff and reflect back and forth as we continue to learn from amazing out bosses. Every now and again, we're also going to add a fun personality who's been on the show. And this time we are super, super lucky to have Jax Wheatley, who is the wizard of tax and accounting from Rainbow Tax and Accounting, which is an amazing firm here that's based in Portland, Oregon. So Jax, welcome back.
Thank you.
Yeah.
It's my privilege.
Yeah. So together, it's going to be our goal to amplify the wisdom that so many LGBTQ plus entrepreneurs have shared to deliver the best business advice centered around leveraging our rainbow superpowers. So with that, I think we're going to get started. And we wanted to start the office hours out with thinking about conceptualizing your business from the beginning. Like, what is our business idea? What problem are we solving? How do we shift our mindset from employee to entrepreneur? And this week, we thought we'd just kind of center the whole conversation around this concept, which is this: revenue is vanity, profit is sanity, and cash flow is queen. Okay, so we're going to talk about that and deconstruct it. And I couldn't think of a better expert to bring in other than Jax to talk with us first about some of the basics. Like, when we say revenue, what is revenue? When we say profit, what is profit? And when we say cash flow is queen, why is she queen? So can you break down, to start, revenue? I mean, basic. I know this is basic, but there's some folks where this is new. And even for some of us veteran folks, it's always a good reminder. So how do we define revenue?
Revenue is the total amount you're paid for your service or product or whatever it is that is bringing business to you. It could be, if you're a professional, it's most likely some type of consulting fee. If you're a retailer, it's the total price of all the things that you've sold in a given period, whether it's a day, a month, or a year. It's our starting number. It's a lot of businesses, that's how we start gauging sizes of business, is based on gross revenue, which is the total dollar amount you're bringing in the door.
Okay. And that is an expert definition. So when people say revenue is vanity, what does that mean? Why is it vanity? Why do people get so excited of I'm a $5 million annual grossing business? And does that really tell the story of what's going on with the business? Or does it just sound nice?
Well, I think that part of why we're saying that revenue is vanity is that there is a certain amount of, I can remember the first time I went up over $100,000 in revenue in my practice, and I was ecstatic. There's a certain sense of, as the revenue continues to go up, that you might think you're more profitable, whereas so even my busy season as an accountant ends at the end of April. And so I always kind of assess my business in May. And this year in May, my revenue from tax season was up 20%. But more importantly, my net profit was up 100%.
Yes.
That's the bigger number, because if my revenue had gone up 20% and my net profit had gone down, it would mean I was in a worse position, even though I was doing more work. it's only one of many key factors that tell you how your business is doing.
Yep.
And sometimes business grows not based on any more customers, just based on an increase in price, depending upon what it is you're selling.
Yes.
So,
yeah. And so you mentioned net profit and this idea that profit is sanity. It's another kind of indicator of how your business is performing. Again, back to the basics, but like, how do we arrive at what our net profit numbers are, whether it's based off of quarterly kind of resources coming in, expenses going out, like, or
Right.
annual? Like, how do we get there?
So there's really two profits that I think most small business owners have to be aware of. One is, what is the net profit, which traditionally is what's my income less my expenses for the business and only for the business. Then there's what we call a tax profit. And that could be higher or lower than the net profit. So it's always good for, especially starting out small business owners, to understand that your net profit is where we kind of start talking about tax implications and how are you going to get taxed on that and what's that going to look like. And they are two different numbers. And the idea is we want the net profit to be pretty substantial. You want it to be able to fund your own personal expenses, rent, cars, all that other stuff, retirement, vacation, time off. A lot of entrepreneurs, when they first start out, don't realize, oh, I'm now self-employed. I don't work for XYZ big corporation anymore. So guess what? I have to pay my own health insurance. I have to pay my own Social Security taxes, and I have to pay my own retirement. And if I can't do that, then am I really making a profit? Would I be better off going back to work for XYZ company?
Yeah. Before we kind of talk more about the next piece, which is the cash flow piece, and it kind of goes back to the revenue piece. This might be helpful for people that haven't yet started businesses. So if you can kind of translate these concepts into kind of personal income that's coming from someone you are working for. So if revenue in a small business is vanity, how does that equate to someone's salary, right? Just to kind of like, so that we can draw some parallels for people that haven't yet made that leap. What about someone's salary? Like say you make $150,000 a year, right? Like, does that tell the whole story for an individual working for someone else?
I don't think a salary per se tells the complete story, because many different companies have, I might work for a company where I'm making $150,000 a year, but if I have to pay for my own health insurance, if I don't get any vacation time or just what is absolutely legally required, and Oregon is one of the few states that's actually now requiring paid time off. It's minimal, but they're requiring it on certain size corporations. So if I have to pay for those things all out of my pocket, my $150,000 is not equivalent to someone who works for a company that has a lot of benefits, they may have stock options, they probably have health insurance and is the health insurance also cover my significant other and any dependents I might have?
Yep.
Totally. All of those things, you can't compare $150,000 from company A to company B without knowing what the benefit structure is like.
Right. And say you have like the best benefits, does that still tell the whole story of like what your take home pay is?
Fairly easily, yes. It's going to tell you where you're at in that level of take home pay. And to be real honest, minimally, if you were saying, okay, I want to have the equivalent of $150,000 salary with a company with good benefits, you're talking about your gross revenue being self-employed is probably going to be 3 or 4 times that number.
Yeah. Yep.
In order for you to get to the same place, net cash coming into my pocket, into my personal pocketbook.
Yeah. And the reason why I ask that is as people are thinking about taking that leap, and some people want to, I know for myself, like one of my first goals in my first year was like, whatever I was bringing in from being employed at my last job, I at least want to hit that level in my business. So that's important to kind of recognize, like, what is your kind of take home pay? And then when you're thinking about the business that you need to have, the revenue that you need to have coming into your new business enterprise where you are the boss, after you kind of look at all of the expenses and you look at kind of the taxes, like where does that align with what you were previously paid? And I know that that's a factor for some folks. So anyway, thank you for kind of entertaining that kind of pre-starting your own business and kind of being an employee working for someone else.
And that's scary, like everything that was just talked about here. Like it's easy to stay in a job for those reasons, right? The security or the feeling of security at least. But it's scary to be like, okay, health insurance, twice as much as I made with someone else.
Yeah.
Can I really accomplish this?
Absolutely.
It's a barrier. I don't know if it's just mental or...
Yeah. I mean, I definitely think that goes back to mindset. Like, and thank you for bringing that up, Allon, because I think we also have to consider when we're self-employed or running our own business, that kind of we're doubling the kind of at least the federal tax burden. It depends what state you live in if you're in the United States, but just like what is it, like 7% that you're paying and your employer is matching that, right? So, but we kind of endure 14%. Is that still right? I'm looking at the tax expert.
It's 15.3.
15.3. Okay, I am off.
Most small business owners can count on total federal and state tax liability being about 35 to 40% of what they make.
Yep, right.
And people don't think about that, especially people who go into consulting where there's very few kind of what they call deductible expenses. And they think, oh, well, if I'm making $25 an hour here and they want to pay me $35 an hour, that's more money. Well, it's actually not when you take the tax burden into account.
Absolutely.
That's just the tax burden. That's not even the benefits and all the other things.
Yeah.
And you also mentioned the scary thing is that I can remember the first time that I went on vacation when I was fully a consultant. And 3.5 weeks later, oh my God, I have no money.
Yeah.
Because I had taken 2 weeks off and I had 2 weeks of non-billable time.
Yep.
That's why I say it's really important. You have to think about those things when you're an employee, whatever your salary is. If you're working for a company that has benefits and you have vacation time, you go on vacation, you still keep getting your paycheck. You go back to work. Yes, you have catch up to do, but you still keep getting your paycheck.
Yep.
I have catch up to do, but I have 2.5 to 3 weeks more before I can actually bill that. And then the customer's got to pay it, which gets into the cash flow being queen.
Yes. Right. Okay. So we've talked, we went back to revenue and kind of used that analogy of how that relates to a salary. We talked a little bit about like the fear factor. We talked briefly about profit as sanity and these kind of two distinctions between net profit and then the profit, your tax profit, right? Are there other things that are kind of in thinking about profit that might be helpful for those folks newer to these concepts before we talk about the queen of the cash? Anything like that when we're talking about tax on net profit? Talk to us a little bit more about what that means, just because I want to make sure that people understand that basic concept. So you're talking about you look at revenue, you look at expenses on an annual basis, you're getting ready to file your income taxes April 15th. Like, what is tax on profit? What does that mean? Like, where does that show up for folks who are running their own businesses?
It shows up instead of the wages on a W-2 line. It's a few lines. Well, under the new tax code, it's very different, but it shows up on another line in your tax return. It also shows up on an additional form to assess Social Security and Medicare taxes on that money at 15.3%. And that's like most of my small business owners, the first year they actually have a profit, they kind of go, oh my God, I had no idea. And the other misconception that happens is they think, well, I only took out X number of dollars out of my business, especially those that keep business and personal records separate, which I highly recommend.
Yes.
They'll say, I only took X amount out of my business account. So they think that's their income. It's like, no, that's not your income. That's your draws. That's just cash you transfer from business to personal to cover personal expenses.
Yep.
What's money coming in and money going out of the business account, that's what you're going to pay tax on.
Yeah.
And they don't quite understand that. So that's why I say, and then there are other expenses if you're working from home and auto, and there are a few kind of what we call non-cash expenses that you're able to take that get you to a little bit lower tax return, maybe, but those all depend on having the cash flow to do those things.
Yep.
A lot of them.
Yeah. Let's talk about the cash flow piece then. So we've talked about revenue. We've talked about different kinds of profit. Where does the cash flow come in? So how do you define cash flow, number one? What is cash flow? Basic 101 kind of for the audience.
101?
101, like cash flow.
Cash flow. So cash flow always starts out with the actual money coming to you, not what you've invoiced, but the money actually coming to you from the work you've done, money going out based on whether or not you've paid all your expenses. And then cash flow can also mean if you have a business loan that you took for a startup, well, there's a loan payment that goes out. It doesn't always show up through your, what's showing up in your bank account is not always going to be showing up on your profit and loss.
Right.
So we have to think about those things that are what we call balance sheet type accounts, which loan payments are, if you do credit card, you charge them, they're going to show up on your profit and loss, but they might not have cash out yet.
Right.
Because you haven't paid the credit card.
Right.
So
is it an easy way to think about it is like real time if you just looked at your existing business bank account, what is there is an indicator of cash available, cash on hand, liquidity, or is that something separate?
It's not always what's available in your bank account, because if I know that if what's available in my bank account is $5,000, however, I have $1,000 bill on my credit card that I have to pay off, but what's not available is not that $5,000. What's available is that $4,000.
Gotcha.
The other thing that, unfortunately, with kind of the electronic banking age that I run into a lot is having folks think, well, the bank says I have $5,000. The bank doesn't know about the $2,000 check you mailed yesterday.
Yeah.
And so they start spending money, and then all of a sudden, I have things bouncing. Why do I have things bouncing? So that's where if you don't respect the queen, you're going to get yourself in a lot of trouble.
Okay, so then the queen, can you say like assets less liabilities? Is that like a good way of describing cash flow, or would you just describe it in a different way?
It's cash less current debt.
Cash, so right. So you look at
not necessarily all assets, but cash.
Right, cash.
Actually,
the bank
money,
account.
Yep. Money we have in the bank.
Money in
Checking,
the bank.
Savings.
Minus like monthly payments and other kind of liabilities where you owe someone, right?
Correct.
So, Alon, you had a question.
What I got from that was the flow actually means going both ways. Is that correct?
Yes.
So it's easy to the cash flow. I'm just thinking the flowing in part, right? So yeah.
No, there's flowing out too.
Right, of course. But when you explain it like that for someone that doesn't really know the terminology, it's very helpful.
Yeah. Hey, Outbosses. Rhodes Perry here. As you all know, part of my passion for this podcast is to empower you and fellow LGBT entrepreneurs to cultivate a feeling of purpose and belonging in your business. To know that you can show up and be the most authentic version of yourself. Purpose, belonging, and workplace culture are concepts I take seriously in my own consulting business. In fact, I'm on a mission to empower leaders just like you and those on their way to joining us to cultivate cultures of belonging. In my upcoming book, Belonging at Work, I share some of my personal struggles of coming out as a trans guy in the workplace and how I leverage this experience as one of my business superpowers. Now, I'm on a mission to support you in taking simple actions that will make a world of difference for anyone who has ever felt as if they needed to hide important aspects of themselves on the job. When you commit to purchasing a special, limited edition copy of the book, a portion of your purchase will support expanding workplace opportunities for fellow transgender and non-binary people. An added bonus, your story about what it means to belong at work will be featured on the book's website to inspire others. You're ready to belong at work now. To learn more, visit rhodesonamazon.com or text 444-999 and type the word belong. Again, that's rhodesonamazon.com or text 444-999 and type belong. So let's talk more about the queen. Like, why is it important as kind of business owners to always, like, one, know your numbers, right? But then two, kind of thinking about cash flow itself. I mean, to me, I think that's also sanity. People are talking about profit as sanity. I'm like, to me, like, I feel really confident when I'm like, okay, I know where everything is and I know what needs to go out and that it's going out, but I know that I'm still in the black. There's no red, so why might that be important, especially like for folks just getting started? So I'm just thinking of that about like past accounting classes that I've had where, you're thinking about the different types of accounting, like accrual accounting and then cash accounting. So like, is that helpful in this example of kind of breaking it down for people of why cash flow really matters? Or I mean, I'm sure you can take this in a number of different directions. So
I mean, we could go straight to 401 accounting, and we'd be way past 101 on this.
No. Let's keep it at 101. Yeah,
right?
101,
Yeah. So I would say probably 90% of the small businesses that I work with deal with things on a cash basis, meaning it's income when I actually get the money from the customer, and it's an expense when I actually pay it out. You want the money coming in to be higher than the money going out.
Yep.
That's kind of 101.
Yep.
One of the things that a lot of times small business owners, maybe especially first starting out, don't really understand is when they take out money out of the business account for their personal. So they're going to look at that profit and loss, and it's going to say they have a profit. Yet if they take out, say they have a $2,000 profit, but I took out $2,500 for my personal expenses. Well, I just now made my cash flow negative $500.
Yeah.
Because I took out more than I brought in net.
Yep.
And that's, I think, where some small business owners can get behind. And they just, and then it's a constant catch-up game. Then the other thing, too, is that when you take that $2,500 out personally, did you put any of that aside for taxes?
Yeah.
Most of them don't. They say, oh, this is what I need in my personal account. That's what I'm going to take.
Yeah.
So then they've just doubled up their negatives.
Yep. Michael McCallowett's Profit First. Are you familiar with that book at all?
I have seen it.
Yeah.
I actually may even have it. Probably haven't read it.
Well, there's one, and this is more for listeners. I think it's a helpful read and kind of assessing, like when you're looking at total revenue that you're bringing in for your business, there are kind of different categories, and this is pre the 2018 tax changes. So there might be some, it might be interesting for you to read it and then like come back and or at least look at these tables. But one of the tables for like newer businesses that are just getting started, so they're under like $250,000 in total revenue, is kind of looking at thinking about for every dollar you bring in, thinking about breaking it down by percent. So the way that he had structured it for those kind of revenue generating businesses is 15% is set aside for taxes, something like 35% is set aside for expenses. This is where my percentages, if I'm wrong, please correct me, but 45% I think goes to owner's pay, and then 5% is profit. So it's just, I found it to be helpful to think about it that way, so that every dollar is accounted for, and you're thinking about taxes and things that you want to invest in expense-wise for your business, and then making sure that there's enough for you as the owner of the business to pay what you need to pay to live your life. But then that savings, the business savings too.
Correct.
Yeah. So anyway, I mean, I would recommend that for folks just to kind of take a look at and keep in mind that lots of things in the United States have changed since 2018 and the new kind of taxes that we talked about when you were last on the show.
In January, yes. We did talk about taxes.
Yeah. So like percentages then, like do you think that's helpful to think about, or do you take a different approach when you work with your small business owners?
Well, if they come to me before a tax season, then yes, we're going to talk about it in terms of percentages and what do you think the costs are going to be, and more in hypotheticals. Unfortunately, a lot of people don't realize they have a problem until they come at the end of their first year, and then all of a sudden they're like, what do you mean I have to pay $10,000 to the IRS? And I say, welcome to self-employment.
Yeah.
Now, if you'd have come and seen me in October, we could have taken care of some of this maybe, or at least you would have been prepared.
Yeah.
So it's really important if someone's going to be self-employed, they either understand how the system works. I mean, you're probably one of the more knowledgeable folks I know who's self-employed about how the tax stuff works. Most people, though, especially if they've gone from a paycheck where, and I even run into that all the time. I'll say to somebody, they want to know, am I going to owe? How much am I going to owe? And I'll say, how much do you make? And they'll give me their net amount. Well, that doesn't tell me the right number. That's not the right number. Taxes are a creature in and of themselves that have to be accounted for. I would say 15% might be okay for federal, but then you got to add another 7 to 9% if you're in Oregon, which is one of the highest states. Oregon and California and New York are all high tax states. If you're in those states, you better account for some state tax as well.
Yeah. I usually do like 20% across like for estimated taxes. And then I kind of like look at the end of like, where did I line up? But it's usually kind of around, it's usually okay. But Allon, I know that you have questions. So if you want to chime in now, please do.
Yeah, I have.
Yeah.
Like I was kind of thinking, I've gone through a cycle of like making money, like a good chunk for a month, and then just kind of falling off for 3 months, and makes me feel like I have a bad relationship with money, like a complicated relationship with a partner, basically. So I know it's part mental. It's something I'm sure a lot of people, it's not just me, feel that way, right? Because I never felt like I had success with money. So then it's something to do with my relationship with money. I have a bad relationship with money, I start to tell myself. So I need to kind of get over this. Any advice would be just awesome.
I think, and we'll go to kind of the tax expert, but I think like the woo side,
The woo side?
we'll go there first. I mean, it's definitely energy, right? Like that's when I think of money, and certainly like I have my own kind of family history of like, stories that the family told about money. But I think at the end of the day, it's really an exchange of kind of putting energy into good work, and like for the work that you do of helping people with podcasts, it's like you're making amazing podcasts for other people. That's the energy you put in, and the flow that comes back is that kind of compensation. And the more that you can kind of see that, I think that might help kind of with some of the kind of the mental blocks that might pop up. But I think like from kind of like a business management side is also thinking about, okay, so if like these ebbs and flows of like, okay, May and June, like these are like the busiest times of year. How do you stretch that, knowing that the flow is going to come back to you, the work is going to come back to you, but how do you manage like that big bulk of money that comes in? So like from a tax expert advice, if like, I don't know. I mean, I do a lot of LGBT work. June is an amazing time. You're going to be speaking, traveling, da 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 da. You're going to do all the things. Can that sustain you for the rest of the year? What might be some strategies around thinking about that? Both like, how do you keep more money in your pocket?
Right. Yeah. I used to jokingly call tax season credit card payoff season for myself personally.
Yeah.
About 75% of my income for the whole entire year happens between January and April.
Yeah.
And it is difficult to make it all last.
Yeah.
You have to have good sources of credit, which means you have to keep your credit rating up. And the goal for me is always, okay, I want to it's one of the reasons why I look at my numbers in May. I don't look at my numbers in December.
Yeah.
I do only to do my tax returns, but that's not really where I want to know. I want to know, I go from May 1st through April 30th. That's my business year. It's not what I pay taxes on. That's an entirely different issue. But I want to know that at the end of my busiest season, I have paid off all of my debt, my current debt, and I have cash flow to sustain me for some period into the future. I'd like it to go, each year it goes a little bit longer. When I first started out, it was like, can I even get to May? Now I can usually get through the summer, and usually in the late summer is when planning starts again. So there's a new kind of, it's not as big a chunk as I get in the first part.
Yeah.
But I wanted to address a little bit your question about the bad relationship with money. I will tell you that the most successful business owners I have great relationships with their money. Yeah. It is something that if you're a person that doesn't have a really great relationship with money, it can be challenging to be self-employed. My first financial advisor told me two things I will never forget. One, you cannot retire on credit cards. That's what started me putting money into retirement. And the other thing that she said is that most people, when you are talking to them about money, you are talking to their inner 10-year-old. I think it's much younger than that, but she believed it was 10, so I quote her as being 10. If you are having challenges with money, you have to go, okay, I am dealing with a kid. Let's have some loving kindness. Let's not beat up on it. Let's do some training. Let's do some education. People do tricks. I mean, I have friends that freeze their credit cards in water and keep them in the freezer. Because by the time the credit card has thawed back out for them to be able to use it, they've had the time to think about, do I really need or want this item I think I want to buy?
Yeah.
And those little tricks work.
Yep.
They really do. And I cannot downplay Woo enough.
You're in the right place.
For sure.
Woo definitely works. I tell people a lot. One of the things is that I am currently the president of the Portland Area Business Association, which is the LGBT chamber here in Portland. And I've been involved ever since I first came out with that organization. I never was involved with PABA in order to get new business or to make money. And every hour and dollar I've invested into that organization has come back to me 100-fold at least.
Mm-hmm.
But I didn't go in there with the intent of making money. I went in there with an intent of being part of a community of like-minded folks, of people I wanted to do business with. And I think that is part of the woo part aspect of it, is
Mm-hmm.
that it wasn't about me getting business, although I did get a lot of business as a result of it. And, I'm hence very well known in the community here in Portland, but that wasn't my intent. Thank God I'm an extrovert and a Leo. It helps.
You're a Leo? No,
I
I'm
am.
just kidding. Yeah, I think that on the woo side of things, just to go into the archives of the podcast, we had a while back another Portland business owner, Lillian Karabayak from Oh My Dollar. Her whole kind of work that she does is she largely works with millennials, but I think it's like her message can resonate with any generation. And it's really, her thing is called Get Your Money Together. She does a lot of that kind of mental work of deconstructing where did you get messages about money, and it really goes back to probably your inner 10-year-old, your inner child, and understanding that that's like from your parents' perspective, but how do you self-actualize as an adult to kind of say, all right, like 90% of that was like myth or not really the reality that I'm in now, and how do I build a healthier relationship? The folks that I've worked with in kind of social justice space is also kind of this kind of tension between take down capitalism, it's terrible and it hurts people, to, okay, like how do we build social enterprises that make the world better and have better, like until the revolution happens, which I'm happy to join when it arrives, but like how do we survive in a capitalistic world where we can do good work and feed ourselves and have enough and live comfortably, and we can do that and still be good people. I think that's some of the, at least in kind of circles that I've run in for a long time, that's always been kind of the backstory of like, this isn't just if we kind of like, if we feel comfortable. And I think we can have enough without being selfish and greedy and whatever. But those definitions are also really subjective based on our inner 10-year-old, I guess, right?
Right.
That makes a lot of sense.
Yeah.
And the inner 10-year-old thing is helpful because it can, like you're saying, nurture that relationship. So just seeing it as another relationship is it makes it clear, at least.
Yeah, absolutely. And like one of the other things that came up is like two things. Like first, if you're just getting started, that first year is really hard because you don't know what the cycles are of the industry that you're stepping into. So what I would say is one of the things that was really helpful for me was getting kind of a cloud accounting system of just seeing numbers like by the month. And you're building kind of that trend data that first year. For me, I've been in business for 4 years and I can see like, okay, these are the busy seasons and this is what I need to do to kind of manage my money throughout the year. And so I think like it really requires a lot of self-discipline, coming up with like your own job description of who you are and what your paycheck is. And like, if you want to get paid bi-monthly, that's usually what I do. If you want to get paid once a month, however you want to do it, but you have owner's pay. You have like, this is just the amount that is the transfer from your business account to your personal account. And that's it. Like anything more, you're stealing from your business. I mean, that's kind of the mindset that I got in because I'm like, okay, I'm going to build up. I mean, the business was built on sweat equity. It wasn't like I had like funders coming in to like support it. So how do I build up this nest, but pay myself? And man, that is hard. It's hard to do. But I think like the more that you can kind of create your own kind of accounting controls, that might help kind of
like
navigate.
you said, I think structure, discipline.
Yeah.
I'm not even saying that's bad, but I mean, that's a large part of it looks like as well.
Yeah. And it's almost like a contract that you have with basically this kind of like baby that you're raising, which is your business. Like how are you going to be good to the future of your business and for you as a quote unquote employee of that business, right? And if you can kind of write a contract just with yourself, you can kind of go back to it when you're tempted of like, oh my God, I want to travel the world and ride my bike for the next 3 years and I could do it. But no, like,
right.
I mean, it's okay. So now you can see some of my own self-talk there. But I mean, those are just some things that I have found helpful. But I'm curious, like for y'all, like maybe Jax, when you were getting started, how did you think about knowing that like, boom, like this first chunk of the year is like money time, but then how do you navigate Like, did you come up with like your own kind of contract with your business, or what was the discipline that you exercise that seems to serve you well?
I'm not a very disciplined person, and especially when it comes to money. Unfortunately, I have to admit that. I mean, I'm kind of one of these do as I say, don't not as I do type people. Unfortunately, with my own money, when it was just me, it was always okay. I can work more. I can go out and hustle a new client or whatever, and it was actually fairly easy, even in the lean times. If I felt like it's like, okay, I'd just do a few networking events and start talking about what I do, which is unique in my profession. The way that I do it is unique. And usually I can find somebody who needs that particular skill set and get a new contact out of it. When it really became a challenge for me was when I actually opened a brick and mortar office. I no longer worked out of my home office and met people in coffee shop. I have a monthly rent payment. I have monthly utilities. And that was at the point in my career where I had to actually make a budget.
Yeah.
And I highly recommend that even if you're working out of your own home, make a budget so you know whether you're on or not. And the biggest thing I had to make a budget for is that everybody has a pitch for you to sponsor this, that, or the other thing. And I had to get to the point where once a year I make those decisions. I have a set pot of money. I make those decisions. You wouldn't believe the number leading up into Pride, the number of people that have these nice special things, and they're all wonderful causes. And I really would like to support them. Yes. And I have to tell them, but I made those decisions in November when I was planning my budget for the 2019 year. So budgeting is it's probably my one discipline that has saved me. And I started it really after I got to the place where I actually had employees. I have other people's lives on the line. It's not just my money.
Yeah.
So that's definitely a more difficult road. So for those folks that do have employees in whatever their business model is, you got to budget right from the get-go. You can't slack on that. You've got to have a good accounting system. Hire the payroll out. Do not do it yourself, period. Yep. It's like really a bad idea.
Yeah.
So
I think like I mean, so many good strategies in that. I think that the piece around budgeting and again, the first couple of years, you're still kind of gaining that trend data, but track it. Like really, really know your numbers, understand your profit and loss statement. And this something that can kind of help you with this kind of cash flow piece. And talk to experts, listen to podcasts like these. There's another really great podcast for LGBT folks called Queer Money, I think it is. So I'll include that in the show notes. We've run out of time, and clearly this is a topic that we could probably be talking about for several more episodes.
Spins off into a bunch of other conversations as well.
Gosh.
Usually.
It does, yes.
Yeah.
There's a lot to it.
Oh, I've got 100 new episodes in my brain right now.
All right. That's where, so right after this,
I'm
we're
in a
going to be
slow
like...
period, so I could be a recurring guest because I'm in the slow time now.
Yeah. It could be really powerful to have you come back, Jax, and also Lillian, who's local here, to help us maybe with some of the mindset, like our relationship with money and how we can maybe build a healthier one, especially if people have strong feelings about capitalism. So with that, I want to thank Jax. I want to thank Allon as always for being here for the office hours. Let us know, what you like about the office hours, what you wanted to learn about. Some of the things that some of our guests have talked about over the past 130 plus episodes, right? So there's a lot in them, and we really want to be able to use the office hours to unpack that. So as always, thank you for tuning in to this week's episode of The Out Entrepreneur. It is a pleasure to connect with so many of you all. Details from today's conversation, where you can find Profit First. You can learn more about Jax's business. We can learn about Poddream if you're thinking about starting your own podcast, talking about your business. It's all going to be there, and it's at outentrepreneur.com. Let us know again what you think, especially if you can visit iTunes while it's still around before it becomes just Apple Podcasts. But please leave a rating there, a review. Let us know what's going well, what you want to see, guests maybe to interview. That will make sure that more people are exposed to the show and get to learn more, just like you all are doing. Finally, keep showing up, keep being your authentic selves at work and beyond 100% of the time.